Hi guys. Hello. Can you hear me? Can you hear me? Can you see me? Hi Tewza. Hi Nabil. Hi Shifa. Hi Shfaq. You okay? Right. We were talking about substantive procedures, right? The other day, and I also shared some tunes of mine with substantive testing. Just a moment. With substantive testing, I also shared some tunes with you. I'm sure you would have gone through. But today we are directly looking at some questions. Okay. Um, Here, when you look at this particular question, it is for 20 marks. Your examiner is testing substantive procedures for 20 marks entirely. So basically, you need to understand that it's very, very, very important, like I've told you earlier. So, for 20 marks, here, when you look at here, the first particular area is for 5 marks, and then 6 marks, 5 plus 6, 11. 11 plus 4, 15, and there is something here also. So we know when it comes to substantive procedures, it's about what are you doing and why are you doing. So in the exam, always remember that we have to tell the examiner what are we doing and why are we doing something, right? Um, blank page. So remember in the exam, sorry, we are going to tell the examiner what are we doing. What we are doing will be the procedure, like, I'm sorry, inspection, you know it, review, reperform, recalculate, reperform, inspect, review, recalculate, reperform, what did I say, observe. So all these are what we are doing, and why are we doing our assertions ACCA cover. So we are going to start off with a verb action, and then we are going to give a proper procedure. Okay. Okay, coming back. When you look here, for 5 marks, we have to give 5 procedures in the exam. Elendua manufactures chemical compounds using a continuous production process. Its year end was 31st July 2016, and the draft profit before tax is 13.6 million. Draft profit before tax is 13.6 million. You are the audit supervisor. Your examiner is telling you that you are the audit supervisor, and the year end audit is due to commence shortly. The following matters have been brought to your attention. What are the matters? Number one, revaluation of property, plant, and equipment. Number one, it's about revaluation. Okay, you got to give 5 procedures. I'm going to give you about 2 to 3 minutes, 3 minutes to go through this, and then we are going to do it together, right? About 2 to 3 minutes. Let me keep my timer on. Um, I'm giving you 7 minutes. gonna give you. I'm gonna give you 3 minutes. I'm going to 3. Right. Start working on this. Start getting some procedures for me, please. Start working on procedures. Please, not very clear. Okay. Why do you say it's not very clear? Isn't this clear, guys? Isn't this clear? It's clear, right? Oh, mine is shit. You're shitting? What's shit? Your connection is shit, is it? Please go on to Google. Please go on to Google and please type in L&Duaco manufacturers and you'll be able to get it. Right? I think I'm on camera, so I have to smile. Okay, let's start. Guys, quick. 3 minutes, try to get the answers, please. Okay, in the exam, under exam conditions, you got to make sure that timing is very important. Here, 5 marks means 5 procedures. So you got to make sure that you give crystal clear 5 procedures where you tell the examiner, what are you doing? Why are you doing? Right? So I want you to generate 5 procedures for me. I've given you 2 minutes. The timer is on. Sorry, 3 minutes. The timer is on. So there you go. Start. Done. Get it done. Have you generated some points? Have you generated some points? Shall we? Okay. Well, at the beginning of the year, management undertook an extensive review of LE's non-current assets valuation. At the beginning of the year, you went in detail about the non-current asset valuation. And as a result, decided to update the carrying value of all property, plant, and equipment. You're updating the carrying value of all property, plant, and equipment. The finance director, Peter, contacted his brother Martin, who is a valuer, and requested that Martin's firm undertake the valuation, which took place in August 2015. So basically, your requirement is describe substantive procedures you should perform to obtain sufficient appropriate audit evidence in relation to the above matters. Here, the matter is revaluation of property, plant, and equipment. The matter is revaluation of property, plant and equipment. Okay, any points? Any points? Any points? We are talking about what? We're talking about revaluation. We're talking about what? Guys, are you with me? Can you all hear me? Are you with me? Everybody, are you with me? We're talking about revaluation of property, plant and equipment. Okay, tell me, what is coming to your mind? With the valuation report to ensure suitable assets have been considered. Okay, I'm getting some response. Okay, but in the exam, yeah, let's try to do the connections, right? If it can try to get the connections clearly, it becomes very, very, very easier. Okay, now guys, like I told you, as an auditor, you're going to check the financial statements of the company. When you're checking the financial statements, you're checking for accuracy. Now, when you're checking for, if it is correct or not, material misstatements or not. Okay. Now, when it's substantive procedures, always you start with a verb, like we know. Number two, you're going to give the assertions, plus always try to connect it to an evidence. Evidence is very, very important. If you can connect to an evidence, then what happens is evidence is a supporting document. So try to see if you can connect it to a supporting document like board minutes, like FA register, like valuation reports, things like that. Now, when it is revaluation, you are bringing in an expert to come and revalue. So this expert is going to give you, the expert is going to give you a report. So you can always go review the revaluation report for you to understand if the revaluation actually took place or not. So number one, review revaluation report. Number one, review revaluation report to confirm evidence of revaluation. You're going to confirm that revaluation actually took place. Are we clear? Are we clear? What are you looking at? You're looking at the report. When you're looking at the report, you have evidence. You have some sort of an evidence. So that is coming from an external party. So it's very, very, very reliable. Now, when you revalue, this revaluation has to be, keep it very simple. This revaluation has to be reflected where? In the FA register, non-current asset register. Because non-current asset register, now I'm going back to evidence, I'm going back to supporting documents, you understand? So this non-current asset register will include all relevant revaluation that took place, correct? Obviously, it has to know. No, you have to go and check if it is complete or not. So another point, second point can be review non-current asset register to confirm revalued amounts. Are you clear? Are we clear? Okay, there's a question. The question is, Martin, it's not it's not ethical for Martin, for his brother, uh, Martin, to conduct this revaluation. No, here, please don't bring it here because it's an ethical issue. Here we are looking at substantive procedure. So don't try to mix that here. For that, you will not get marks. So it's a separate area, ethics. So if the question was on ethics, yes, this could have been an issue. But here we don't have a problem. It could have been a threat, but here it's not a threat. So you don't have to worry about that. Okay, someone has said depreciation. Superb. Now, after revaluation, you're going to depreciate, correct? So basically you revalue and you depreciate, meaning I am going to recalculate depreciation on the revalued amounts to confirm the accuracy of depreciation. So next point could be recalculate depreciation for a sample of revalued assets to confirm accuracy. Do you understand? Are we clear? Are we clear? Okay, performs competency check of value through inquiry of qualification and experience to ensure capability of performing a revaluation. Okay, superb. That's a good point, Abdullah. I like that point. Okay, now Abdullah comes and says, okay, fine, there is an expert. So let's review the expert's qualification, knowledge, background to understand if the person is competent. Superb. Review experts' competence, knowledge, qualification. There's another point. Superb. Okay. Terza says review the financial statements for disclosure relating to whether all it was done according to IAS 16. Terza, can I modify it a bit, Terza? Can I say review the financial statements to confirm if appropriate disclosures were made in relation to revaluation? Five, review financial statements to confirm appropriate disclosures in relation to revaluation. Are we clear? Now, guys, we can actually honestly, we should be able to connect. Okay, if it's revaluation, what is revaluation connected to? Revaluation can be connected to the FA register. Revaluation can be connected to the depreciation. Revaluation means, okay, you have to disclosure in the financial statements. It can be connected to that. So all those can be connected and work. Are we clear? Good. I got some good points. I'm happy. I got some good points. I'm happy. Good. Can we go further? Can we go further? Okay. Inventory valuation. Once again, take about 3 minutes. Let's do inventory valuation. Take about 3 minutes. Let's do inventory valuation. But this time, in terms of inventory valuation, there are six, okay? There are six that you need to work around. Plan. How you can connect inventory, what can be connected to inventory, plan it out. Okay, try to generate your points, and then I'll give you my points. Try to generate your points. Okay. Okay. So let's get back. Your firm attended the year-end inventory count for L&D Co. So that means you have already gone for the inventory count. Inventory count is done. And ascertained that the process for recording work in progress and finished goods was acceptable. So you're happy. Both WIP and finished goods are material to the financial statements, and the quantity and the stage of completion of all ongoing production was recorded accurately during the count. During the inventory count, the count supervisor noted that a consignment of finished goods, compound E243 with a value of 120,000 was defective, in that the chemical mix was incorrect. The finance director believes that the compound E243 723 can still be sold at a discounted sum of 400,000. Meaning, value of 720 is now 400,000. In simple terms, compound E243 has to be written down to 400,000, correct or not? In other words, you can obviously review financial statements to confirm if E243 has written down to 400,000. Connect it to the scenario. That's very, very, very important. Connect it to the scenario. Very, very, very important. Are we clear? So the finance director says, look, he thinks from 720,000, he can now sell it for 400,000. Discounted valuation is 400,000. So now you have to go and check the financial statements to confirm that, okay, are they still keeping it at 400,000 or are they keeping it at 720,000? That's the first point that you need to understand now, guys. Correct. Okay. Now he's saying that it can be 400,000. Now I want to understand the basis of this. Who is saying? The finance director is saying. The finance director is saying, okay, now we are writing it down to 400,000, correct? But what is the basis? So what will you do? You will have a discussion. You will have a discussion, discuss with finance director to confirm how did he, the basis of this inventory valuation, the basis of 400,000. I want to understand that also, right? Are we clear? I want to understand how did he come to this 400,000 basis, correct? Okay. Ashfaq, good one. Review the post-year-end sales to confirm the selling price of damaged inventory. Okay, Ashfaq says, okay, take the post-year-end sales of the defected items to assess NRV. Good point. Um, review uh, review for any post-year-end sales uh, to assess NRV. I'm fine with that. I'm fine with that. Abdullah, review inventory aging to identify slow moving goods if the allowance and cost has been updated accurately. So, guys, hold on, guys. Guys, just give me a second. I'm getting a call, guys. Just give me a second. review. Guys, you can hear me, right? Yes, you can hear me, right? Okay. So basically, one, two, three, third point covered. So I'm going back to my fourth point, right? Uh, the fourth point is I saw someone talking to me about WI aged inventory. I'll come there, Teresa. Let me come there. So I'm going to review the aged inventory. Okay, how long I've been holding the inventory, right? Aged inventory report for me to know if there are any slow moving inventory. So I want to understand if there are any slow moving inventory to identify slow moving inventory. Okay, why? If the inventory is slow moving, basically people are not buying it because I'm a bit overpriced. So I need to understand the NRV. So reason for this is NRV. Are we clear? Okay. So how to work with WIP and finished goods? Now, when we are talking about WIP and finished goods, Terza, you can recalculate your inventory value. Now you have your inventory value. Now your inventory value has your WIP, raw materials, and finished goods. Now you can take everything together to confirm if the value is accurate or not. So number five, you can take a recalculate inventory value. The verb would be recalculate inventory value by taking into account WIP, raw materials, and whatever the finished goods to understand the inventory, to confirm the inventory accuracy of inventory value. Number five. Number six, okay, probably here in this case, 720,000, which was written down to 400,000. So there's a difference of 320,000. So this 320,000 probably looks material. So if it is material, I would be also interested to understand material. I would be also interested to understand if if adequate disclosures of our inventory was made in the financial statement. So that's another point that I would consider in the exam. One, two, three, four, five, six. Adequate disclosures. Um, then I've got some more answers, so I'm going to just go through. Review the cost sheet and purchase invoices of sample of inventory to ensure all costs are accurately recognized in the value of inventory. Looks fine. Inventory aging, I think I took it. NRV cost, I took it. So basically, we have covered the points that you have told me. Perform reconciliation between cost of sales, and inventory to ensure during the year inventory consumption is accurate to make inventory. Abdullah, can you explain that even further, Abdullah? I didn't understand. Terza, now you understood, yeah? Minu, Inshifa, are we clear? Superb. Let's keep it very simple, right? Let's not try to write too much. Just make sure what is asked, we are responding. Clear? And finally, there is a bank loan. For bank loan, obviously, they're giving us 4 marks. So I'm going to give 4 procedures. Okay. Take about 2 to 3 minutes and quickly work through your bank loan as well. Well, Nabil, I want you to give me start off with a verb and give me a proper sentence. Don't just give me the points. Give me a proper sentence, Nabil. You got your points, but you're not giving me a sentence. I want it as a sentence, Nabil. Good, Raza. You got some points. But guys, you need to give 4 points, yeah? Okay, let's keep it very simple. He secured a bank loan of 2.6 million on 1st of October 2014. Now you're going to give substantive procedures for the bank loan. You're borrowing 2.6 million. So if you're borrowing 2.6 million, the first thing is loan. If you're taking a loan, there'll be an agreement. So as an auditor, you can always go back, review loan agreement. Why will you review the loan agreement? Obviously, to confirm if the loan was the loan amount was correct. Number one, whatever they say, 2.6 million, to confirm if the 2.6 million, the value of the loan is correct and it was actually obtained. So what will you do? You will review. Why? To confirm the value of the loan. So review the loan agreement for the valuation of loan, if the value is correct or not. Are we clear? Repayments of 200,000 are due quarterly with a lump sum of 800,000 due for repayment in January 2017. Okay. Now you are going to make repayments every quarter. You're going to make repayments every quarter. Now you need to confirm if these quarterly payments are being made on time or not. So obviously the second point would be what? How will you know that the payments are going? Where will this be reflected? Where will these payments be reflected? In payables, just in the financial statements. Okay, when you make payments, where will it go? When you make the payments, where will it go? When you make the payments, where will it go? Bank statement. So you need to understand if the payment is going on time or not. Okay, so you can review bank statements. Why will you review the bank statements? To confirm the repayment of bank loans. To confirm repayments of bank loan. That's the second thing that you can do. When we are talking about bank statement, here we are reviewing the loan agreement, right? Here we are reviewing the loan agreement, but we can still review what? The bank statement, number one, to talk about the liability, and number two, did this 2.6 million actually come? So the bank statement, if you have received the money, the bank statement will confirm it, right? So I'm going to review the bank statement to confirm loan receipt. So I want to confirm the loan receipt, if we actually received it or not. For that, I'm going to go back to the bank statement to confirm that. Are we clear? Right. One, two, three. Another thing that I can talk about in the exam is, guys, I've taken a loan, right? If I have taken a loan, based on this loan, I have to pay what? I have to pay finance cost. I can recalculate finance cost. I can recalculate finance cost based on the loan agreement. What are the terms in the loan agreement? I can look into that. I can recalculate the finance cost. And then I can check if it is accurate or not. So recalculate finance cost to calculate accuracy of interest. I want to know if it is correct or not. Are we clear? But of course, I received more procedures. Looks pretty fine. Looks pretty fine. If you want, I can give you another one that's coming onto my mind. You can actually review the loan agreement once again to confirm about the late payment. Regarding the late payment terms and conditions. Okay, now they say that they are paying late. So we want to understand the late payment terms and conditions, and 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 uh, and what are the penalties for this, and if the company is meeting any penalties for this, if there are anything in terms of the repayment, the penalties that we need to look into. Are we clear? Are we clear? Others, everyone, are we clear? Everybody understood? Okay, we can move on. We can move on to the next part of it. Can I move on? Can I move on to the next part of it, guys? Okay, brilliant. Guys, we'll also look at more questions on this, and then I'm trying to also work on internal controls as well. Okay, super. Now, the second part says, describe the procedures which the auditor should perform in assessing whether or not the company is a going concern. Okay, now they want to know the procedures as an auditor that you're going to undertake to understand if the company is a going concern or, okay, shall we do that also? Can we do that also? Can we do that also? Brilliant. Give me a moment. Okay, first of all, let's try to understand what is this concept of going concern. Guys, first let's try to understand what is the concept of going concern. What is going concern? What is going concern? What do we mean by going concern? Going concern means what? A company's ability to operate indefinitely, a business's ability to carry business activities in the forthcoming years, continue business in the future years. Okay, so going concern, every business will make an assumption. What is this assumption? The assumption is that is the strength that we give to the shareholders. The strength that we give to the shareholders that the company is not having any difficulties. We will continue. We will continue our business. So going concern is an assumption that a company will operate into the foreseeable future at least minimum for the next 12 months. For the next 12 months, we will not have any difficulties. We will operate without a problem. IS1. IS1 is presentation of financial statements that requires management to prepare financial statements on a going concern basis, meaning you're going to continue into the foreseeable future. However, if you feel your continuation there is a threat, then you need to change the way you prepare financial statements. So generally, you're going to prepare financial statements on a going concern basis, meaning you're going to continue into the foreseeable future. But sometimes, if you are not, probably you have some threat to going concern. In that case, what you will be doing is you will not be preparing financial statements on a going concern basis. Instead, you'll be preparing financial statements on a liquidated or breakup basis. Meaning you will not have non-current assets, because non-current assets are assets which you will have for more than 1 year. So now you will not have non-current assets, you will change them into current assets. Okay, brilliant. Now, coming back, as an auditor, you need to identify events or conditions which can give rise to going concern problems for a company. You need to identify conditions and events. What are the conditions and events? Number one, you can have financial indicators. Now, as an auditor, you will be looking for these problems within a company to understand if it's a going concern or not. Number one, financial indicators. Financial indicators means financially the company is struggling. Like there's a net liability. Your current ratio is negative, for example. Overall, you have a net liability. Number two, you're defaulting on loan repayments. So default on loan repayments can be another sign where your going concern is a problem. Number three, your financial ratios are there, right? Gross profit margin, net profit margin. All these margins are negative, are not positive. You have operating losses. You're not operating properly, meaning your operations are at loss. Your operations are at loss. Next point could be you have cash flow problems. Your cash flows are not positive. You don't have enough cash flows coming into the business. Next problem, you are discontinuing dividends probably. Your shareholders, you're finding it very difficult to pay them. Obviously, shareholders have invested for dividends, and when you are unable to pay them, so that means you're discontinuing dividends, means your financial stability is very weak. Your cancellation, your suppliers are not giving you credit terms. They usually give you maybe 2 months credit terms. Now they say no, you have to pay us immediately. That could be another problem. As a company, you're finding it difficult to raise finance. You go to the bank asking for some loan. The bank says, no, we don't have money. We're not giving you money. Meaning your credit worthiness is very, very low. Your credit score is low. And then maybe sale of long-term assets. You have long-term assets which you are selling. That could be another reason for your going concern issues. That is financial problem. There can be operational indicators. There are financial indicators. There are operational indicators as well. What are operational indicators? Your market has changed. Your technology is changing. For example, Tesla was one of the most popular cars, but no, now now Chinese car manufacturers are taking over Tesla. Apple used to be one of the best phone sellers in the world, but no, now the Chinese manufacturers are taking a toll at Apple. So fundamental changes to your market or technology would have a significant impact in terms of your operations. You're losing your management persons, key strength people. Your marketing guy is not there. Your board of directors is not there. Your finance director is not there. You're losing a franchise. You're using your license. Probably that can have a problem. There is a shortage of supplies. You don't have enough products to sell in the market. That could be another reason why operational indicators can come in terms of going concern. And number three, you can have indicators which are other indicators. For example, non-compliance. You can have compliance issues. You have pending legal cases. The company is struggling with legal cases. Now, for example, McDonald's from Sri Lanka was removed because they were not adhering to the international quality. So because of that, you became a going concern. I mean, McDonald's shut down overnight. We never knew. You understand? So today, I remember 2 days, I think McDonald's shut down on a Friday. On Wednesday, I was at McDonald's. And I was actually, telling one of my friends, I was saying how the quality has come down. When you compare it with international franchises in McDonald's across other countries and compare it with Sri Lanka, well, the quality is very, very, very poor. And the very next 2 days they shut down. So you understand there are other indicators as well. Are we clear? So as an auditor, what are the procedure that you can do? Now that is very, very, very important. What are the procedure that you can do when you see that, okay, there are issues? You can get a letter of comfort from the parent company. If there is a parent and subsidiary, if the subsidiary is making loss, the parent company can give you a letter of comfort, meaning parent company says, I will take care. If there's a problem, I'm there. I can support. Don't worry. Number two, you have to analyze and discuss the cash flows, profits, forecast with the management, understand, okay, if they are prudent or not. Now you can also go through the latest financial statements. Okay, we audited the financial statements of last year. What has happened this year? Latest financial statements, do we have any improvements or not? Latest cash flows, do you see any changes or not? Are the changes positive or not? You can undertake that as well. Next, you can obtain, review loan agreements to check whether they are breached or not. Okay, after the year end, okay, fine. There are cash flow issues after the year end. I'm going to check if the loan agreements have any problems or not. Are they meeting the cash flows on time, issues on time or not? I can review board minutes to understand what has happened within the company. Are the board minutes, how are the board minutes showing? What do the board of directors think? I can get a letter of representation. I can get a letter of representation from the management to say, okay, look, we are not having any problems in terms of going concern. We will continue. So all these can be procedures that we can work around. Okay, now let's come back. Describe procedures which the auditor of L&O Co should perform in assessing whether or not the company is a going concern. Take about 2 to 3 minutes and try to answer it. Take about 2 to 3 minutes and try to answer it. What can you do? Think about it. Describe procedures which the auditor of each should perform to assess whether or not the company is a going concern. Review the company's cash flow forecast to ensure future cash in and cash outflow. Okay. Abdullah says, okay, Ziyan, let's review the company's cash flow forecast to understand how their cash is being managed. Do they have enough inflows? Do they have enough outflows for us to understand? Do they have enough cash to meet their expenses and the liabilities? So that is one thing that you can do. Okay, Inchifa says, let's obtain a letter of representation. Obtain a letter of representation to understand if the company is a going concern. I'm happy. I'm happy with that. No problem. Inquire and confirm with company's lawyers on ongoing legal cases. Yeah, if you have any legal cases, we need to understand, okay, how are they going to manage these cases? That's correct. Cash flows are sufficient to repay loans. Don't just keep it like that. No, I wouldn't expect you to do that. I wouldn't expect you to do that, Nabil. Here they say the payments are being late. I saw somewhere the payments are being late here. I can talk to the management and understand why the payments are late, if there are any problems with their cash flows, why is it late? And I want to also confirm that after April and July, the next quarter, the payments are being made on time or not. So I can review the bank statements to confirm that. I can review the bank statements to understand the cash position of the company, if there are cash coming in properly or not. I want to understand that also. Next, what I also want to do is basically I want to I had something in mind. Review post year end management accounts to assess if it's in line with the cash flow forecast. You can do that, and review the financial statements after the year end to understand if there is anything positive about it. If the cash flows are looking positive or not, you can review after the year end to understand that as well. So yes, I also think I have written answers for this earlier. What I can do is I can perhaps share that with you. Are we clear? Are we clear? Shall we look at another question? Shall we look at another question, guys? Shall we look at another question? Okay, super. There's another good question that I saw. Let me see if I can get it. Okay, we can do brains for you. Brains for you has both audit procedures and audit report, and then we can also do substantive procedures. Guys, how are you with audit reporting? Are you all okay with audit reporting? Can I directly look at questions, or you want me to cover theory? Are you okay with need to brush up a bit? Okay. So you want me to do the theory as well, is it? You want me to do the theory as well, is it? Okay, let me look at the theory. But before looking at, we can look at kinetics pizza, right? So number 4, you can start working on number 4, right? I'll quickly pray and come. I haven't prayed yet. So start working on 4. I'll be back shortly, right? Shall we? Shall we? Okay. Describe substantive procedures you should perform to obtain sufficient and appropriate audit evidence in relation to the above two matters. So there are two matters. Obviously, number one, the property, plant and equipment. First issue is the property, plant and equipment. Second is the equity. Okay. Super. Let's get going. Kinetic, kind, Kianic Pizzas or whatever, K Pizzas operates a large chain of fast food restaurants. You are an audit supervisor of J&Co, so you are given a position to play. You are the audit supervisor of J&Co. And you are currently preparing the audit programs for audit of case financial statements for the year ended 31st March 2016. You're reviewing the notes of the last week's meeting between the audit manager and finance director, where two material issues were discussed. Number one, property, plant and equipment. In the past, K has received negative press reports over the condition of its fast food restaurants, with comments suggesting they are old-fashioned and tired looking. You know, that's what our students also told, right? When we started off, why are you being very conventional in terms of conducting classes? You're just doing it on Zoom, so it's very conventional. Don't be conventional. You know, we take these comments very seriously, right? Where we were told our mic systems were not working properly because the mics and everything comes from the laptop. The laptop has to capture the camera. Very difficult sometimes because it slows down. But honestly, some of you would have come from different institutes, right? Do you actually see a difference in terms of the quality of the product that we are giving? Do you see a difference? No background entirely. It's on iPad. We have a different mic just for classes. It's big, it's massive. And we have a camera separately. Do you see a difference or you think Nabil, okay, Nabil says yes, because from then to now, you see a difference, it's better. Okay, even in terms of videos. Others, do you see a difference? Probably you would have gone to other institutes. Do you see a difference? Your virtual classes are far more better than any others, and it's attentive, not like others. Okay, super. Revision is the best. What do you mean, Nabil? Revision is the best. Thanks, Abdullah. Because we always try to, this was a big decision that PPM had to make. We invested significantly in technology. Meaning, Nabil, elaborate. We have invested significantly in this. So, these comments really helps us to understand where we are going down, where should we improve, because it's always about feedbacks, right? For us, we take students' feedback very seriously. So, thank you. I'm getting nice comments. Thank you. If there are any concerns, just let me know. In the meantime, I'm sure my team would have got in touch with you. As per the current world, there won't be physical classes, correct? In about 5 years, we won't have physical students. That's how it looks like, correct? We had to adapt, so we've adapted, and we see a lot of success in it because the quality. I'm sure if you had checked our page, right? If possible, just try go and check. We've got if you go onto our page, right? Basically, we've got everything that a student requires, right? Now, let's say you want to purchase your courses, whatever the courses that you want, right? Oh, by the way, I'm sure by now you know others don't do much revision and their classes are not as interesting. You go an extra mile and give everything. Yeah, we have to, right? So guys, PPIM is coming to Kandy. We are opening our new branch in Kandy in January 2025. I'll be happy if you guys can support us because PPIM started in a small classroom from where we started. Right now, we are one of the leading ACCA institutes in India. We are in India, Maldives, Vietnam, Dubai. and now in Sri Lanka, we are coming to Kandy. Anyway, coming back here, what I wanted to show you was primarily the recorded classes that we are providing, right? Now, for example, let's say you want to take a test, right? This particular test, audit and assurance, right? Guys, a student last session, last session was where we had the word price. So that particular student has taken this, right? I know this is 15,000. We are reworking the cost, understand. But the moment you attempt this 180 questions, right? For every chapter, for let's say audit risk, we've got questions. For substantive procedures, we've got questions. For every chapter that you study, we've got questions that cover. If you really want the question, it covers how it covers. It gives you answers. It gives you where you have to work on strength, weaknesses, your opportunities, where you have to strengthen yourself. All those are covered. So if you ever think you think it is going to help you, you can go back. You can try to get this, because this will be coming on offer later this week. But you know, one thing we build upon is quality, and I'm sure you know these are world 1, 2, 3. This last 1 or 2 sessions. So basically, I'm going to bring you Mariam in our next class, and she's going to talk to you about audit and assurance, which is relevant to you as well. So yes, coming back. So this came up when they are old-fashioned and tired-looking. So I believe now. Yeah, my idea is that more than money, you help people and everyone to get success. Yeah, for us, you know, it's not just financially this thing. Now, these revisions are, there are the institutions which charge about 10,000 or 8,000, I don't know, but we give it freely to make sure that where possible, we can support students. We are taking back from the society. We want to give it back to the society some way, and we feel some way we're trying to do it as much as possible. Having said that, on Monday, we are starting the marathon session. We're starting the marathon session. Well, marathon is something nobody else does. Revisions are done in marathon. What we do is we simplify concepts and we try to summarize all your 80 hours of studying in just about 8 to 10 hours. That's what marathon is about. So if possible, try to join the marathon. It's one of the best out there. Farin is doing it. Farin and I do audit and assurance for PPIM in Sri Lanka, India, and Maldives. If possible, try to join in. I'm sure you've got the posters. You see the posters as well. Thanks, Abdullah. Thanks for your wishes. Really appreciate it. Anyway, coming back, old-fashioned and tired-looking. Therefore, during the year, company undertook a full review of all its assets and carried out extensive refurbishments to the majority of its restaurants. This review resulted in a significant amount of aging fixtures and fittings being disposed of, and a significant amount of capital expenditure was invested in all the remaining restaurants. So here, in the past, K has received negative press reports over the condition of its fast food restaurants, with comments on suggesting they're old-fashioned and tired-looking. Okay, first point. Therefore, during the year, the company undertook a full review of its assets. Okay, you went through and you checked all your assets to check which require replacing, and you carried out an extensive refurbishment to the majority of your restaurants. You have a chain of restaurants, so you undertook refurbishment. This review resulted in a significant amount of aging fixtures and fittings being disposed. Okay, there were aging fixtures and fittings, you disposed it. And significant amount of capital expenditure was invested in all the remaining restaurants. Okay. Well, very simple. Capital expenditure was invested in all the remaining restaurants. Okay, you purchase new assets. If you purchase new assets, my dear, if you purchase new assets, where will this be reflected? You purchase new assets, where will this be reflected? You know, you saw this already. You saw this already. Take it easy. Purchase new assets. New asset purchase is taken to non-current asset register, my dear. So please go review the non-current asset register to confirm that all newly purchased assets are included. Guys, always it's a trend, it's a fashion. I mean, it's going to repeat. Don't worry. You get my point? So if you purchased assets, it's going to be a part of your non-current asset register. That's the first thing. You're disposing assets. Now, when you're purchasing, you add. When you dispose, what do you do? From non-current asset register, you will remove. Correct. Now, look at the way I'm connecting non-current asset register here and here. Here to add, to make sure everything is added. Here to make sure that I'm gonna review the non-current asset register to confirm it is removed. Are we clear, guys? Am I clear? Are we clear? Do you understand how I'm connecting it? So keep it very simple. Don't worry too much, right? Keep it very simple. Guys, do you understand? Yes or no? Are we clear? Everyone? Okay. Now, the next thing. Now, tell me, Terza, look here, Terza. You're adding non-current assets, like Terza. If you're adding non-current assets, what will happen to these non-current assets? What will happen to these non-current assets? Terza, what happens to these non-current assets as at the year end? As at the year end, what do you do? In Shifa. Assets, what happens? Increases, correct. Yeah, I'm not saying no, that you have already accounted. What happens? As at the year end, what do you do? Nabil, no. Minoli, you've never spoken to me a word. Hi, Minoli. As at the year end, Ashfaq, what do you do as at the year end? You've got assets with you. There you go, Ashfaq. Depreciate. Now you have to think like that. As at the year end, recalculate depreciation for a sample of assets, new assets to confirm that they're accurate. Now, guys, you need to think, you need to connect. If it's non-current assets, yes, non-current assets, register, additions, disposals, depreciations. Now, okay, now that you have recalculated depreciation, now you need to keep in mind you are disposing. When you dispose, what happens? When you dispose, what happens? When you dispose, what happens? What happens when you dispose? Brilliant, Abdullah. Disposal gain or loss. What do you do? You will calculate disposal gain or loss for a sample of assets. Well done, Minodi. Calculate disposal gain or loss for a sample of assets to confirm that they are accurate. There you go. Now see how easy I'm generating. How easily I'm generating. Now you're disposing. Once again, you're disposing. Think about disposing. Keep in mind, when you're disposing, you receive what? You receive what? Cash. Well done, Abdullah. Now you're disposing, you're going to receive cash. Where will cash be reflected? Where will this be reflected? Where will this be reflected? Well done, Abdullah. Bank statements. I am going to review the bank statements to confirm the disposal value. If they actually disposed at this value to confirm the value is accurate or not. Now think, look at the way I'm connecting. Guys, I have only few supporting documents in my mind. I will have board minutes, I will have disclosures, I will have financial statements, I'll have bank statements, I'll have maybe an expert valuation, an FA register. I will try to see how to connect, guys. Now you need to be able to do that in the exam. You understand? Okay. Now, once again, right? Once again. Uh, you are purchasing assets. If you're purchasing assets, you will have a purchase invoice. In the purchase invoice, you can go and check the cost of the asset to confirm if the value is correct or not. Or for a sample of assets purchased, you'll check the bank statements to confirm if the value that you've paid is correct or not. Of course, you can review the press report to understand what is the background to it and why people think I think someone sent me that also, which looks pretty okay for me. Review board minutes to check the approvals of capital expenditure. Brilliant, Ashfaq. I'm very impressed with that. Board minutes, because capital expenditure is not a small thing. It has to come to the board and you need to get confirmation on that. Brilliant. Review press reports to check if there were actual reports on building designs and interior. If there were actual reports, or do we say actually there were comments regarding the problems or not? I'm happy with your answers. I have to tell you guys, I'm happy with your answers. Most of you are okay with your answers, right? We need to polish them a bit, and you should be fine. But let me tell you, at this rate, we've got another 15 to 20 days for the exams. Go with this pace. You can be the next prize winner. I have to tell you, March was my prize winner. June was a Sri Lankan prize winner. September was a world prize winner. If you can complete that streak of December prize winner, I would have had, actually, me and Farin would have had 4 prize winners in 4 consecutive sessions. So let's try. Let's try it. One of you could be the next prize winner. That's a sort of a happiness also for us. Anyway, um, coming back, equity. Work on equity as well. Can we work on equity as well? Work on equity as well. 2 to 3 minutes to quickly go through equity, please. Yes, are you done? Are you done? If you're done, give me a done, okay? I'm waiting for you. Okay. The refurbishment was financed via a share issue in April 2015 at a premium of 1.6 million. So how did you do the refurbishment? The refurbishment was done through a premium. You went for a share issue premium. You issued shares at a premium. Okay. Brilliant. Now, guys, share issue. Share issue is a small thing or a big thing? Share issue is a small thing or a big thing? Be honest. Share issue, big thing. Big thing means the big bosses should approve it. The big, there you go. Review board minutes. Well done, well done. I love this class. Okay, review board minutes. Superb. Review board minutes for confirmation that the shares were the issue was authorized by the board of directors. Brilliant. Superb. Well, you're talking about 1.6 million. 1.6 million somewhere has to come to you right now. Do you see that it's a very straightforward technique, guys? I mean, you don't have to complicate substantive procedures are not difficult, okay? There are much more difficult things in life, not substantive procedures. Try getting married. So review bank statements. Brilliant. To ensure the cash receipt that you've received this 1.6 million. Brilliant. So review bank statements. Nice responses. Okay. Now, guys, if you look here, in total 4 marks, right? So 4 points. Don't forget. Now, if it's premium, the premium has to be classified between. Oh, brilliant. Okay, that's a nice response. I got a nice compliment from a student. Thank you for making substantive procedure easy. Yeah, keep it easy. Make it easy. Don't worry. Don't worry. We can make it easy. Let's practice. Okay. And next week also, I want to meet you on a weekday evening. I want to meet you on a weekday evening, once or twice. And then next Saturday also, I want to meet you. Okay. Brilliant. So you're gonna review the bank statement to confirm the receipt of 1.6 million, and you're going to review the financial statements because it's issued at a premium. If it's issued at a premium, where will it be reflected? Where? Issued at a premium means how is it taken, accounted? How is it accounted? Premium, how is it accounted? The accounting part of it. Equity and share premium. Well done, Abdullah. So you are going to go review the bank statements to understand the split between share capital and share premium have been correctly accounted. So split between share capital and share premium. You're going to review the bank statement for that. Let's give another one. Now let's go back. Well, not a rights issue, Terza. No, that's out. That's out. Now, guys, you're issuing shares. Shareholders are coming in, probably new shareholders. What is the document it has to be, which captures it? Which document captures this? Which document captures this? Share certificate, shareholder registry. Well done. Shareholder certificates are updated. You're going to review the extracts of shareholder register to confirm that it is updated. Review the extracts of shareholder register to confirm that this is updated. Are we clear? Are we clear? Are we clear, everyone? Yeah, now, if you think it's going to be difficult, it is always going to be difficult. Now, you need to be prepared for, you need to have that mindset. Okay, the procedure that you give has to make sense. You understand? So don't confuse yourself. I mean, just go with that mindset in the exam. Okay, right. Now, guys, sometimes your examiner can also test you with something like this, right? Uh, for each of the two subsequent events described. Okay, it's subsequent events. Now we're looking at subsequent events. Now, guys, let me quickly take you that as well, right? Now, now you're preparing financial statements, correct? Now, your financial statements are prepared for this period, no, guys. Your financial statements are prepared for this period, 1 year. Now, let's say 1st of January 2019, you start, it will go on till 31st December 2019. This is your reporting period. This is your reporting date or balance sheet date. You can call it either your reporting date or you can call it as your balance sheet date. It is your reporting date or your balance sheet date. Are we clear? Super. Now, although this is your reporting date, your financial statements will not be released. Your financial statements will not be released on this point, at this point. Your financial statements will be released after the financial year when your annual AGM, annual general meeting is happening. So at your AGM, only the financial statements will be issued to the shareholders. Are we clear? Okay. Now, although the financial statements are prepared for this period, there can be transactions, not transactions, particularly events that can happen after the financial year, but it has a relevance to the financial year. We call this period the subsequent period now. So the subsequent period is period after the financial statements are, the reporting date is done. So there can be certain events that can happen after this particular period, but it has an impact on your current year financial statements. That's where IAS 10 events after the reporting period comes into play. Adjusting and non-adjusting events are there. That's where adjusting and non-adjusting events come into play. So basically, here, your examiner can put you in a situation to understand, okay, if this is an adjusting event or non-adjusting event, do we require an adjusting event means what happens? You have to go back and change the financial statements to reflect as if, you have to go and change the financial statements as if the event happened in the current year. Although the event happened after the financial year, you have to go back and change the financial statements. A non-adjusting event does not require any changes, unless otherwise, if it is material, you will have to go and disclose. So your examiner is going to test you with adjusting and non-adjusting event here. So let's try to understand that. Are we clear? Okay. Now, in total, you're getting 10 marks. The examiner wants you to say, for each of the two subsequent events described above, based on the information, look here, your examiner says, based on the information, explain whether the financial statements require amendment and describe audit procedures which should now be performed in order to form a conclusion on any required amendments. Are we clear? So number one, financial statements, do they require amendments? Number two, audit procedures. Let's look at both, okay? Now, in the exam, each case gives you about 5 marks. Now, you need to understand that, okay? Each case gives you about 5 marks. And how are you going to write? How are you going to get your 5 marks? I'm going to explain you now. Okay. First, read the scenario on your own. Read the scenario on your own and give me that. Done? You're done. Give me a done. Done, guys, done. Guys, done or not done? Why you all quiet? Are you stuck? You want help? Do you want help? Can you hear me? Hello, can you hear me? Guys, can you hear me actually? Okay. Grain manufactures breakfast cereals and has 3 factories, 4 warehouses, and 3 distribution depots spread across North America. The audit for the year ended 31st December 2015 is almost complete, and the financial statements and audit report are due to be signed shortly. You're going to sign the financial statements shortly. Audit report and financial statements will be signed shortly. Profit before tax is 7.9 million. The following events have occurred subsequent to the year end, and no amendments or disclosures have been made in the financial statement. So after the year end, this has happened, and no changes to the financial statements have been made. Now it's your responsibility. It's your responsibility to recommend whether financial statements require amendments. Number one. Number two, to recommend audit procedures. Okay. Event one, fire. On 15th February 2016, your year end is 31st December 2015. Okay. Okay. A fire occurred at the largest of the distribution depots. The fire resulted in extensive damage to 40% of companies' vehicles used for dispatching goods to customers. However, there have been no significant delays to customer deliveries. The company estimates the level of damage to the vehicles to be in excess of 650,000. Only a minimum level of inventory, approximately 25,000, was damaged. Grains Insurance Company has started to investigate the fire to assess the likelihood and the level of payment. However, there are concerns the fire was started deliberately and, if true, would invalidate any insurance cover. Now, you are going to do only few things. Your examiner says, explain whether the financial statements require amendment. Meaning, should you go back 2015 financial statements, should you go back and make amendments? Yes or no? Is this, in simple terms, adjusting or non-adjusting event? Adjusting or non-adjusting event? What is it? Everybody. Adjusting or non-adjusting? Inshifa, Abdullah, Minoli, Nabil. I want everyone to respond. Everyone respond. Adjusting or non-adjusting? Terza? Ashfaq has responded. Abdullah has responded. Inshifa? Minoli has responded. Nabil? Adjusting or non-adjusting? Abdullah says adjusting, and then he says, no, it's not adjusting. Guys, look here, look here, look here. This is happening on 15th of February 2016. 15th of February is after your year end 31st December. The event is happening after the year end. So, well, it's a non-adjusting event. Guys, please get it right. You need to tell the examiner, hey, look, yes, this has caused severe damage. This has caused severe damage, and the damage is maybe 650,000. I'm not saying no, but this has happened after the year end. This does not provide evidence of conditions existing as at the reporting date. You get my point. As at the reporting date, this did not exist. So it's a non-adjusting event. That is the first thing that you're going to talk to the examiner. You get 1 mark. Second thing, when you get questions like this, the second thing that you're going to talk to the examiner is this material or not material? What is this, material or not material? What do you think? Is this material or not material? Material, because it's 650 plus 25,000, 650 plus 25,000, 675,000 over 7.9 million, over 7.9 million. How much is the materiality? What is the percentage? What is the percentage? How many percent? 8.2%. So 8.2%. Conclude it is material. No negotiations there. Conclude it is material. So you get your first marks for saying it's not adjusting event. So you're going to tell, look, this event happened after the year end. A fire was there. It cost damages of 635,000. It does not provide existence of conditions existing as at the reporting date. Therefore, it is a non-adjusting event. You're going to say that, number one. And number two, you're going to say that this is material. Are we clear? Are we clear? Now, what would be the impact on the financial statement? So here 1 marks, here your second mark, your third mark. Impact on the financial statement. What are you going to do? You're going to leave it like that, or because it is material, you're going to do something. What are you going to do? Because it is material, are you going to do something, or you're just going to leave it like that? Well done, Abdullah. You are going to disclose. You're going to tell the examiner all these three. You're going to tell the examiner all these three. No restatement, it is disclosure. Okay. Let me show you how to get marks in the exam, right? For this. Okay. In the exam, how you would respond to something like this is, okay, you're going to say, a fire broke out, a fire broke out on 15th February, which has caused significant damages amounting to 675,000. We'll come back to this. Of 675,000. Now look at the way I'm going to answer this, okay? 675,000. The event took place after the year end. Therefore, this is a non-adjusting event. Okay, you get 1 mark for that, okay? That is your first mark. Second mark. The damages. Okay. Okay, why am I having? Okay. Can I make it heading itself? The damages cost a loss of 675,000, which is 8.2% of profit before tax. As such, this is material to the financial statements. Are you clear? That gives me my second marks. My third one. As this is material, therefore, this has to be disclosed in the financial statements. This has to be disclosed in the financial statements. That gives me my third mark. Are you clear? Now, in total, I'm getting 5 marks, right? 3 marks for this. The remaining 2 marks for my audit procedure. So I'm going to give audit procedures also, right? That is also a requirement, right? Audit procedures are also a requirement. Right, brilliant. My audit procedure would number one be what? We are talking about disclosures. As an auditor, what are you going to do? You're going to review the financial statements to confirm if adequate disclosures are provided. Number one, you're going to review the financial statements to confirm if adequate disclosures are provided in relation to the file. Number one. Number two. Number two can be they're talking to the insurance company. Correct. Now, insurance company says it's if it's deliberate, they will not approve the claim. Correct. So you can discuss with the insurance company in relation to the likelihood of the claim being successful. There you go. So 1, 2, 3, 4, 5. That's how I get my 5 marks in the exams. Are we clear? Guys, are we clear? Everybody, did you understand? Yes or no? Are we clear? Did you understand, everyone? Yes or no? Okay, event 2. Take a minute and answer event 2 for me. Take a minute and answer event 2 for me. On 18 February 2016, it was discovered that a large batch of grains, new cereal brand Loopy Green Loops, held in inventory at the year end was defective, as the cereal contained too much green food coloring. To date, no sales of this new cereal has been made. The cost of the defective batch of inventory is 915,000, and the defects cannot be corrected. However, the scrapped cereal can be utilized as a raw material for an alternative cereal brand at a value of 50,000. Now, what is that? Is it an adjusting or non-adjusting event? Adjusting or non-adjusting event? Well done. Well done. Well done, Abdullah. Well done, Ashfaq. Well done, Abdullah. Well done, Ashfaq. Nabil, as at the year end, you had it in inventory. As at the year end, you had it in inventory. If you had it in inventory as at the year end, obviously that means your inventory value is misstated. So let's start answering. A large batch of grains were found defective This was discovered after the year end. However, this provides evidence of conditions existing at the year end in the inventory valuation. Therefore, this is material in the inventory. Therefore, this is material. Sorry, therefore, this is an adjusting event. Next, we have to see if this is material or not. How much does it amount to? Guys, this amounts to 915,000, correct? So 650,000 was material, so 950,000 will obviously be material. You need to tell me how many percent. The damaged inventory amounts to 950,000 as such. Well, not technically 950,000, right? Sorry, 915,000, right? Because you can use it as a raw material to another Abdullah 865, correct? To another production. So amounts to 865,000, which is 915 minus 60,000, I believe. Minus 50,000, I believe. So inventory amounts to 865,000, which is how many percent? 12%, which is about 12% to profit before tax. As such, this is material to the financial statements. Therefore, the inventory value as at the year end has to be amended to reflect the value, the write-off in inventory. Okay, super. Now, audit procedures. What can you do? Audit procedures. You can obviously review the financial statements to confirm if the inventory value has been amended. Review the financial statements to confirm if the inventory value has been amended to account for the write-off, number one. And number two would obviously be how now you're saying that your 50,000 will be a value that you can probably take it as NRV. I want to understand what is the basis for that. Discuss with the directors to understand the basis of NRV, which is 50,000, to understand how the basis of NRV, how the basis of NRV, which is 50,000, was derived. There you go. Are we clear? So guys, you need to explain why this is a problem, and then if you can work around it, you will get your marks. Are we clear? Understood? Yes or no? Everybody understood? Are we clear? Okay, superb. Guys, with that, I'm finishing off the session for the day. Okay, can you do another question in relation to reporting? Okay, what we will try to do is, most likely next Wednesday or Thursday, let's try to meet up for a reporting question, right? I'll try to meet you guys for a reporting question. Yeah, don't worry. I'll try to meet you with a reporting question. And then next week, next Saturday, we will try to work on some systems and controls. Because I believe today is the 16th, right? So we have next Saturday, 23rd, and let me see if I can meet you on 30th also. If I can meet you on 23rd and 30th, both days, so we can practice. Or before that, anyway, I'll try to meet you on the weekday, on a weekday, so we can work around more questions. Okay. So guys, thank you, and try to join the session for the marathon on Monday. Please get in touch with the management. Try to join the marathon session. It's going to be very, very, very effective. Guys, you won't regret. Farin is one of the best in the market. Trust me. Weekday joined FR Marathon. Abdullah, you have joined FR Marathon. For weekdays, I think, yeah, I'm starting on Monday evening, right? So Monday, I think audit is in the afternoon. So I don't think it will have a problem. I think it's starting at 1:30. Guys, trust me, it's done by Farin. Please try to join it. If you miss it, you can get the recordings. Speak to PPIM, get it. You won't regret. He will make sure that you understand the concepts in detail, like how I do. Okay, guys, with that said, I'm gonna, no problem, Terza. Thank you, sir, for your valuable time, for all us to help, for all of us to help succeed in our exams. Yeah, we'll meet more. You know, these messages actually mean a lot. But you know, I would greatly appreciate, right? If you can drop a review for me, you know, that will definitely help us with, you know, how we are doing. No problem. So if you can, you know, if you want, I'll share this thing right after we are done with the session. You know, what will actually help us more is if you can go here and drop a review. You can mention my name if you're happy with me. If you can drop a review here, that will definitely help us with whatever we are doing, and gives us, anyway, we've got 5 ratings. If you can give an honest opinion ratings, that's going to definitely help us in how we succeed. Hope one of us get a prize winner and make it a big review. Yeah, I would love it. I would love if one of you all become a prize winner. That's my target also. So anyway, I'll share the review, the form. If possible, just put a review. It'll definitely help us. But anyway, let's meet up on Monday, maybe for the marathon. And then maybe next Thursday, I'll drop a message. Next Saturday, following Thursday, and following Sunday. By the way, if you have doubts also, you can let me know. Thank you so much, guys, and I will talk to you soon. Take care. Bye-bye. Good evening.